Roxom. Today on the Blockchain Report, the shocking assassination of Charlie Kirk sends shockwaves through politics and Bitcoin, with the crypto community reeling. Meanwhile, the SEC suddenly decides that crypto's time has come, which is rich, coming from the same people who treated Bitcoin like Voldemort just last year. And Larry Ellison briefly leapfrogs Elon Musk as the world's richest man, proving that selling databases might actually be more lucrative than selling flamethrowers. All this and more right now in today's show. Let's go. Good morning, my crypto crusaders, and welcome back to another episode of the Blockchain Report. I'm Hank Hudson, coming to you live from San Francisco. It's Thursday, the day you realize you've survived most of the week, but your portfolio, well, not so much. Now, before we cannonball into today's pool of leveraged ETFs, regulatory amnesia, and billionaires tweeting like they're auditioning for open mic night, let's try some financial mindfulness, shall we? Pretend you've already made it. Pretend you bought Bitcoin at 200 and never sold, and now take that imaginary victory lap by smashing that like button like it owes you gas fees. And don't forget to follow RoxomTV and yours truly at Hank at RoxomTV, because if you're still getting investment advice from TikTok dancers, you deserve the rug pull you're about to get. All right, before we unpack the headlines today, let's check in on this morning's market rundown and see who's mooning, who's melting, and who's just praying the SEC doesn't notice them. Let's take a peek. All right, sweet, sassy, molassy. It looks like Bitcoin might be on the upswing again. Currently, we're at that 114.5 mark. Remember, we've been as low as 110 just a couple of days ago, but things seem to be picking up in the best way possible. Right now, you can still see we have our market cap nearly over 2.25 trillion, which is great. Things are looking good for BTC. Let's see what's going on in the rest of the cryptoverse and see if those moves are happening all over the place as well. Right now, we got Bitcoin again at 114.5. We got Ethereum seeing a little bit of a pump itself, up about a half a percentage point, currently around that 4,400 arena. And Solana, been kind of the darling here the last couple of days. It's up almost 2% this morning, around that 227 level. We saw it come back down as low, I think around 200 as recent as Monday, but things certainly seem to be on the uptick here in the cryptoverse. In TradFi, let's take a peek and see how things are looking there. Right now, the Dow Jones Industrial inching above that $46,000 level. We got the S&P 5 also experiencing a little bit of love over the $6,500 mark. NASDAQ Composite currently sitting above 22,000. And last but not least, we got MicroStrategy. They're seeing very negligible gains today, 0.01%, not a lot to write home about, but they're currently sitting at 326. We got a lot to roll today, so let's get rolling over to our desk and start this morning's bull run. Let's go. All right, and we're back with today's top stories in our bull run. Leading the charge here, we have the unfortunate news about Charlie Kirk, the 31-year-old founder of Turning Point USA and one of Bitcoin's louder political champions, was shot in the neck during a Prove Me Wrong event at Utah Valley University yesterday. Police said the shooting happened just after noon. Students panicked, Kirk collapsed on stage, and law enforcement quickly detained a lone suspect. Kirk was rushed for treatment, but later confirmed dead, according to Fox News. Tributes rolled in across the political spectrum. President Donald Trump posted on Truth Social, "We must all pray for Charlie Kirk, who has been shot. A great guy from top to bottom. God bless him." Barack Obama condemned the violence. Robert F. Kennedy Jr. called him a crusader for free speech. But Kirk wasn't the only conservative, wasn't the only conservative figure. He was also one of the rare mainstream voices who went all in on Bitcoin. Now, on his podcast in 2023, he actually called Bitcoin freedom money, outside of the reach of central banks, exactly what young people should own. He blasted fiat printing, saying, "If the Fed can print at will, your savings are never safe." Now, Bitcoin is the alternative they can't control. During the 2024 cycle, he told students, every student should at least understand how Bitcoin works. If you don't, you're setting yourself up to be ruled by those who do. Love him or hate him, he framed Bitcoin as a generational self-defense. And within hours, while people were still processing the news, crypto did what crypto always does and commodified the tragedy. Within 12 hours of the shooting, at least 5 Kirk-themed tokens had launched. One Solana developer raked in almost $300,000 off a token literally called Charlie. Another Charlie Cartman token surged to a $74.9 million market cap just 4 hours after the shooting on 23,000 trades and $2.4 million worth of volume. Justice for Charlie hit $12.5 million with more than 114,000 trades. RIP Charlie Kirk clocked in at $28.1 million in trading before collapsing. And Kirk coin plunged 85% in only 6 hours, then rebounded over 2,200% in 24, proving once again that meme coins mourn nobody but liquidity. Now, some traders framed them as tributes. Others called it what it was, profiteering. A pseudonymous user named Green even noted that investors were dumping other meme coins just to chase justice for Charlie, because nothing says respectful remembrance quite like a pump and dump. It's not the first time tragedy was tokenized. After Ozzy Osbourne's death back in July, an Ozzy coin briefly popped up before cratering. Hulk Hogan's passing spawned a Hulk coin that collapsed just as quickly. And in August, Justice for Irina, a token created after the stabbing of a Ukrainian refugee in Charlotte, spiked to 25 cents before collapsing to 0.000055 by today. Now, every time the same cycle, shock event, quick token launch, big pump, brutal dump, and retail left holding the bag once again. Bottom line here is Charlie Kirk's assassination is a tragedy that rattled politics and crypto alike, but in this industry, the mourning period lasts about as long as it takes to deploy a contract on Solana. Really quick, guys, I just want to go on a tangent about this. Listen, this is really troubling news, right? And I don't think people are really understanding how serious this is, because no matter what side of the aisle that you're on, this is a nation that is built or supposed to be built on the freedom of speech, on the freedom to have safe political discourse. And there's no way we can learn from each other as human beings and why we are the way we are unless we are able to freely talk about these things to each other. And you have instances like this where somebody probably thought they were doing the right thing because they didn't agree with him, but in fact, you're putting all of us at risk, potentially having to censor ourselves out of fear. And that is how the worst things in history have always begun, right? So like everybody, I don't care if you're left, if you're right, if you're middle, whatever. This kind of stuff is insane. It has to stop, and nobody is benefiting from this, no matter where you stand politically. So RIP to Charlie Kirk, and thoughts and prayers with his family. That's all I can say about that. All right, we're moving on to more of this morning's bull run, and we are going to be joined by a returning guest today that I am super excited to have back on with us. He is a gentleman that calls himself a nerd, a techie, an AI super user, and someone who's made it his mission to fight the Bitcoin FUD and remind everyone that Bitcoin is not the same as crypto. From MSTR True North, let's give a big welcome back to the show to Adrian Morris, everybody. Adrian, welcome back. We're super thrilled to have you, and so is our audience. How are you doing?
I'm doing great this morning. I'm happy to be back. We had a fantastic conversation last time, so I'm excited for this one.
We did. And I'm pumped to have you back, Adrian. Before we jump into the news, though, for those who might have missed you the first time you were on the show or aren't familiar with you yet, can you just reintroduce yourself to us quick and let us know what you've been up to since we saw you last?
Sure. Adrian Morris, Bitcoin investor, longtime Bitcoin investor, strategy investor, also an investor in AI, bullish on Bitcoin, bullish on AI. As you mentioned, I'm a proud nerd. I'm a proud AI super user. I also do fight the FUD for Bitcoin and strategy as well. So that's pretty much my overall story. I've made myself more visible on social media in the last, I would say, about 18 months. Even though I've always been active on social media under various handles over the last 12 plus years. So this is my attempt to do my part in fighting the FUD and hopefully in educating investors.
Well, we're certainly glad you've decided to take off the mask and show your face and your opinions to the rest of the world, Adrian. We're certainly here for it, and we can't wait to hear more of them today as we jump into the news. So hang 10. We're going to be back with you in a second right after I read this story. Okay, so SEC Chair Paul Atkins stood in France and basically announced, surprise, we're done pretending crypto is Voldemort. So after years of regulatory whack-a-mole that chased talent out of the country and lined lawyers' pockets, Atkins says now it's time for clear and predictable rules. He even quoted Victor Hugo, saying an idea whose time has come, which is rich coming from the same building that used to treat Bitcoin like a mob front. Now, the SEC wants to let on-chain fundraising breathe, is hinting most tokens aren't securities, and is pitching a super app with trading, lending, and staking. So yeah, the same SEC that spent years saying no is now sketching out the WeChat of crypto. He even threw in AI plus blockchain mashups because in 2025, no keynote can be considered truly successful without at least mentioning AI once. Atkins pitched faster markets, lower costs, and putting America back in the driver's seat. Cue the bald eagle gif. Do we have a bald eagle gif? There it is. Meanwhile, macro dropped its own plot twist. The producer price index fell 0.1% in August when economists expected a rise, marking the first decline in 4 months. Annual PPI, 2.6% instead of 3.3. Core PPI, 2.8 instead of 3.5. Or in other words, inflation cooled, economists were wrong, and Jerome Powell's life got even harder. Markets immediately priced in a September rate cut with 25 basis points looking locked and whispers of 50 if Powell wants to cosplay as Paul Volcker in reverse. Trump is screaming on Truth Social, big cuts now, calling Powell a disaster. Objectively, it's campaign theater. Practically, it's dovish pressure that Wall Street eats like Skittles. Bitcoin did what Bitcoin does, jumped over to 113K and parked itself around the 114K mark as of late. Still about 8% shy of the all-time high, which was near 124, but traders are already daydreaming about 150,000 if the Fed turns the money hose back on. On-chain, the diehards, the buy and never sell crowd, now control a record 266,000 Bitcoin. That's corporate treasuries, long-term believers, and a few maniacs who would rather sell a kidney than sell a sat. The charts, well, a little shaky. Bitcoin's still riding a long-term uptrend, but the short-term signals look like they've had too many drinks at Christmas dinner. Futures aren't exactly helping either. The whales have pulled back, and it's mostly small fries pushing the volume. The math, well, it's pretty simple here. Hold above 114K and we've got room to run. We slip under 112K though and the floor could drop fast. But the setup is clear. The SEC is finally playing good cop, inflation's cooling, and long-term whales are stacking like it's a Costco run on Sunday. If institutions pile back in, Bitcoin doesn't just break 124, it blasts right on through it. All right, bringing Adrian back. Adrian, after years of the SEC treating Bitcoin like it was Voldemort, now new SEC Chair Paul Atkins is suddenly quoting Victor Hugo and talking about crypto's time has come. What do you make of this complete 180?
So like on my last appearance, remember how I said that I don't think Bitcoin could be stopped by any political party, and I don't think that we should read too much into Trump's about face on Bitcoin. That's really the market dictating what's going to happen. I think that's what this is. Bitcoin has gotten to a point where it can't be denied anymore. And not to just piggyback off of what he said, but many people have used that line, Bitcoin is an idea whose time has come. And I think that's accurate. I think it's very, very descriptive. And I think that the SEC under new leadership is showing what the market wants in their stance. If you take a look at what Gary Gensler was doing, just like you pointed out, I mean, he was literally obfuscating and trying to obstruct Bitcoin and crypto at any chance he got, right? He would say, come in and talk, and hit people with multi-million-dollar fines. He would say, file, and then, okay, file what? How do we file? Well, the rules are on the website. What rules? This went on for years, right? And then it got really, really bad around the time of the ETF approval for Bitcoin. But notice what happened was Larry Fink came in the door. All of that obfuscation kind of went the way of the dinosaur. And then the approval came, IBIT launched, FETC launched, and the rest is history, right? And now we've been chilling around 100,000 for God knows how long. So I think this is indicative of what the market wants. And the SEC has been given marching orders, in my view, to not obfuscate anymore. And I think that this is where some political theater does come into play. The Trump administration, whether they truly believe it or not, has really leaned into the Bitcoin and crypto narrative. And I think that there is a longer term view. And I saw it the other day where, the American economy could be looking to incorporate Bitcoin and crypto into it as a way to offset the debt, which is, not impossible, but that's a longer term strategy that will take some time to set up. And I think that's what we're seeing right now. I think what we're seeing right now is a lot of positioning. There are a lot of individuals that are taking action behind the scenes, getting themselves set up for when the real run happens. I don't think that, we're in for the crazy runs of the past. As I said before, I think we're in for a sustained upward momentum over the next 10 years or so, assuming no geopolitical or macroeconomic black swan events, of course. But if the markets cooperate, I think that's what we're in line for. And that's just my overall view. I think that, all the game playing is stopping now because it's beneficial. The SEC wants to be seen as a partner in a new economic paradigm taking shape, and that's what this is.
Yeah, no, I agree. And, obviously the big 180 we've seen is very much in part because of this shift from Gensler, and now we're with Atkins. And to the point is he even pitched a super app for trading, lending, and staking. Do you think that kind of product ever actually works in the United States, or does it just sound good in a Paris keynote?
I think it sounds good. I don't. So the thing about it is that will there be applications that serve that purpose? Yes. I don't know if there's ever going to be one that, takes over the market. I think what we're seeing right now, if you look at like Robinhood, for instance, Robinhood is really leaning into the millennial, Gen Z, Gen Alpha crowd. They want an easy interface. They want something that can be a centralized location for your financial life. So you can buy Bitcoin on it. You can trade stocks on it. You can, trade options on it. And they're talking about going into banking next. So I can fully see them having a full-fledged checking account because they already do with their Robinhood Gold and their Robinhood card as it is.
Right.
But I can see them really, truly integrating that fully. And surprisingly enough, I think if anyone's going to have that super app, it's probably Robinhood. I can see them having a super app where eventually, 2 years hence, 3 years hence, you can have your Bitcoin on it. You can borrow against your Bitcoin directly. Maybe they can even have mortgages, lending, things of that nature on it. So I already think we kind of have one in shape, like shaping up right now. And the SEC, like most of TradFi, they're always behind the wheel. Robinhood may be existing in TradFi, and other platforms may be existing in TradFi, but you can tell the ones that are innovating and the ones that are leaning into this new paradigm versus the ones that are saying everything that sounds nice, and they're saying, oh yeah, we're going to do this, we're going to do that. And it's like, all right, show us. And until then, it's just a lot of talk.
Yeah, a lot of lip service out there for sure. And to your point, I think I very much agree with you on Robinhood. Without giving too much away, we actually have a story that we're covering later today where Robinhood is starting a chat feature within the app where it also, but the way you get qualified to be part of it is you have to make trades. And if you do, they're posted on like a ledger where everybody can see. So you can follow trades of like people in Congress or whatever. Brilliant idea. They're really, between gamifying, investing and making it so the user experience so much better, Robinhood seems to really know what's going on or where things are headed. And I think might be that super app that you talked about. Now, in regards to kind of the state of the nation right now, we've seen inflation cooling recently. Rate cuts, though, are very much back on the table, and Bitcoin instantly popped over 113K on this news. How much of Bitcoin's next big move do you think is tied to Powell's rate cuts versus actual real-world adoption? Are we just waiting for some kind of catalyst right now to that next leg up?
I think there are a few things going on. So August, and I can't recall if I talked about this with you last time, August and September are typically rougher months for Bitcoin. I know people brought up that in post-halving years, Bitcoin typically does well in August and September. The thing about it is this cycle, quote unquote, is not following the paradigm that we've had in other cycles, right? So we had an all-time high before the halving. We've had price action right now that I think bucks that trend. We've also had decreasing volatility since the ETF launched. I don't think that is a bad thing. I think that is a function of market cap. That is a function of adoption. That's a function of a maturing asset that's going through the adoption curve. Now, to your question more directly about what do I think needs to happen or what, catalysts that we would need, I think seasonality and sentiment is a big one. I've been trying to make people aware of the fact that markets move on sentiment, not on fundamentals. Fundamentals and liquidity may create the capacity, but sentiment is what creates the bid. And I think the bid is going to be coming in Q4. I think we have seasonal trends on our side. We have rate cuts that are coming. We might see, some people are saying we may even see 3 rate cuts before the year is out, including the one that we might see in September. So I think that's a little aggressive. I think we can see 2 rate cuts this year, including September. All of that leads to, a narrative shift that will allow the markets to run. I mean, the last time Powell spoke, he seemed somewhat dovish and the market spiked immediately, right? But then we retraced a little bit. And I think we can, this is when I'm going to sound somewhat bullish. When Powell speaks, if he comes out with a rate cut and he also comes out more dovish, I think Bitcoin can start its run into the end of September, into the end of the year. That's my guess. And I think that, and I know we'll be talking about this in a little bit, the calls for 200K, a little aggressive for this year. 150 to 175, I think that's doable. And I think we will then see where we're at probably Q1 2026 if we see a stronger retracement. Long story short, I don't think we're going to see an 80% drawdown. I don't think the boom-bust cycle is going to repeat itself unless, again, geopolitical or macroeconomic events take place. But those are outliers that no one can really predict. But the catalysts I think we need are the rate cuts becoming official, which I think the market's already kind of pricing in. I think seasonality is on our side. I think liquidity is going to increase into the end of the year, into Q4. And I think that tying into the rate cuts, if Powell comes out more dovish, or if he does actually give us more than 1 rate cut before the year is out, I think that's also very, very bullish for Bitcoin as well.
Yeah, there's a lot of positive narratives seemingly entering the space as we make our way into Q4 here. And to your point, I think sentiment plays such a huge role in it. I feel like people are waiting for almost kind of permission of Powell to say, hey, we're definitely having this first rate cut, maybe a second, maybe a third. And then that's very much going to drive this positive momentum and narrative as we enter what's usually a profitable Q4 in terms of Bitcoin. So we'll see how all that plays out. But I definitely on the same train of thought as you, Adrian. So hang tight, Adrian. We're going to read this next story. I'm going to bring you right back because Larry Ellison, Oracle co-founder, Trump ally, and yacht collector, and professional billionaire, of course, briefly leapfrogged Elon Musk to become the world's richest man yesterday. Ellison's net worth shot up to $393 billion when Oracle stocks spiked more than 40%. Musk fell to $385 billion, which means he only had $385 billion. Please pray for that man. Now, the Bloomberg Billionaires Index confirmed it for a hot second. Musk's nearly year-long reign was over. Then reality checked in, Oracle shares cooled down, and Musk reclaimed the throne by the end of the day. Still, for a few hours there, the richest man on earth wasn't Elon Musk making erratic X posts. It was Larry Ellison, an 81-year-old database salesman with a taste for power. Oracle's surge came from the cloud and AI. The company projected its cloud revenue will jump 77% this year to $18 billion, signing 4 multi-billion-dollar contracts in the last quarter and expecting more soon. AI firms want data centers, and Oracle is selling shovels in the AI gold rush. Ellison himself isn't content with just databases. He's embedded himself in Trump's orbit. When Trump returned to the White House in January, Ellison showed up at the Oval Office with OpenAI's Sam Altman and SoftBank's Masayoshi Son to pitch Stargate, a project to build U.S. AI infrastructure. He's also circling TikTok, which faces a ban unless it cuts ties with ByteDance. Trump said he'd be fine with Musk buying it, but he added, I'd like Larry to buy it too. And then there's Paramount. Ellison funded most of his son David's $8 billion Skydance deal to scoop up CBS and MTV. Because why buy yachts when you can buy Viacom? Ellison, who stepped down as Oracle CEO in 2014 but still runs the show as chairman and CTO, has turned old money into AI money. So Musk is back on top for now, but Ellison proved he can still flex. For a moment, Elon's biggest rival wasn't Bezos, it wasn't Gates, it wasn't Zuck, it was an 81-year-old with a mustache, a database empire, and a direct line to the Donald. All right, bringing Adrian back. Adrian, Larry Ellison leapfrogged Elon Musk to become the world's richest man briefly yesterday, at least until Oracle stock came crashing back down to earth. What does this moment tell you about how AI hype is reshaping wealth at the very top?
So there are a few things that I think we have to take into account when people try to discuss AI as a bubble. And they always compare it to the 2000s, right? The dot-com bubble. Now, I was very, very young when the dot-com bubble happened, but I was actually an early investor, I guess you can say. I remember my first stock purchase was Excite.com. I bought some stock there. I don't know if people remember them. But long story short, the reason why I bring that up is this. The reality of it is that between 2000 and 2022, so at the end of the COVID stimulus, I've seen varying estimates. We've had something like $15 to $20 trillion worth of direct stimulus in the form of government intervention being pumped into the markets. So what does that tell me? That tells me we need a new baseline for what we define as a bubble. If we use the 2000s estimates, that doesn't account for all that stimulus, right? So all of these numbers that people are throwing around saying, hey, the PE multiples are approaching dot-com levels, and the other concentration risks that we see in the form of all these companies are creating a bubble kind of scenario. The reality of it is the PE multiples actually aren't where they were at the dot-com levels. If people actually look into it, we have a much more road to run there. And in terms of the overall size of the market, again, we're not accounting for the additional stimulus that was pumped into the markets between then and now. So if you, and again, this is going to sound crazy, if you take 15 to 20 trillion and you apply just a very, very conservative multiple to that, say 5, that's $100 trillion of excess right there that we can see slushing around in the markets in a variety of ways, between real estate, between other and passive investments, between bonds. We can spread it out, right? So I think the floor for what we determine as a bubble has to be increased, and thus the ceiling must be increased as well. So why do I say all of that? I think we're going to see the world's first trillionaires come out of the AI space. Could it be Elon? Could it be Zuck? Could it be Larry? Who knows? We already saw Elon Musk get that $1 trillion potential comp CEO package just last week that can be worth up to $1 trillion if Tesla's market cap crosses, I think it was 8.5 trillion, I believe is the marker. That can make him a trillionaire right there. People that think that's crazy, I don't think it's that crazy. I think that in 10 years hence, we could be seeing Tesla at multi-trillion dollar market cap, NVIDIA at multi-trillions of dollars, Meta, all of them at multi-trillion dollars of market cap. Where just 5 years ago, a $1 trillion market cap company seemed like an impossibility, right? People would say, oh no, that's crazy, that would never happen. Well, Apple did it, Meta did it, Tesla did it, NVIDIA did it, and the list just kept going on and on and on and on. So what we're seeing is AI reshaping what we consider as, 1, the potential for growth, 2, what we have to define as a bubble, and 3, we really have to reassess, is this really a bubble or is this a paradigm shift? At one point, internet companies, quote unquote, were considered the bubble, right, in the dot-com bubble. But now, by that definition, in the 99-2000 definition of an internet company, every company's an internet company because they're all online. Every single company now is online. I think that's what we're seeing right now. Every single company, in one way or another, is a tech company. They're all online. They all have database needs. They all have data analysis, data management needs. And pretty soon, they're all going to have AI needs. Now, is that a bubble or is that a paradigm shift? Is that a real redefinition of what we consider of what business is? Or is that more of a bubble? I'm inclined to say it's a redefinition of what we consider business is and what we consider are necessary functions of a business. And I think that tech, data, AI, being part of the broader technology landscape one way or another, whether you are a law firm or you are a massive quant hedge fund. I think you're going to have to be part of this. And that is reshaping what the reality is. And that's reshaping what valuations will mean. And that's reshaping the kind of concentrations of wealth we're going to see in the hands of a few small players.
Yeah. I totally agree with you. This is absolutely a paradigm shift. And I'll be honest, I'm kind of freaked out about it, okay? You know, obviously we've seen plenty of the movies. I'm not even worried about the robots turning on us right now, but I am incredibly concerned about how is this going to affect, if we have these people that are trillionaires now, and the wealth gap, especially in this country, is already becoming so large, the middle class is evaporating before our eyes. And people are like, well, if we have a bunch of AI robots or whatever, then people are going to get like universal, like the only answer I see to this of not ending the world or causing some kind of terrible class war is they're like universal basic income. But when was the last time you saw somebody with billions of dollars just saying, hey, I'm going to give all of my money now to other people aside of like charities, which are often used for tax break purposes anyway, right? So it's like this, I think we're reaching a very scary inflection point where the term eat the rich might become all too real in the next like 10 or 15 years, because I mean, we're seeing it at big tech companies, white collar jobs, or no, like Salesforce. They had like 4,000 to 10,000 people that were laid off in the last week or two because they got AI to do their jobs for them, right? So this wealth disparity is like getting really out of control, and we are reaching, I think, a really freaky kind of inflection point in human history now, and it all is because of this AI space. Like the internet was the big invention when we were kind of growing up, and that changed everything, but it just made information more accessible, and now we're just replacing everybody with robots. But I don't think we have a real plan what we're going to do with all these people that are going to lose their jobs. Like this is a scary time. I'm scared. Do you think I should be scared about this right now, Adrian? Are my concerns realistic, or am I overblowing things right now?
Rather than give an answer either way, I would say let's assess it. In the Industrial Revolution, when that really kicked off, right, you had the Luddite movement. So you had a lot of people that were smashing the new machines that were going to destroy the human way of life. But you know, when we have 100 years of hindsight, we see that the Industrial Revolution really increased the standard of living for everyone. I think that what we're seeing right now is a truncated timeline for that kind of a revolution. I don't think it's going to take 5, 10, 15, 20, 30, 40, 50 years. I think that by 2035, if even the most conservative projections of the transformative power of AI are met, we are going to be in a fundamentally different world by then. Now, does fundamentally different mean disruptive? Does fundamentally different mean mass unemployment? Does fundamentally different mean that we're going to need to have a world where we have universal basic income by then? I don't think so. I think the reality of it is that this is where change, adoption collide with the individual. And what I mean by that is, I don't think robots and AI are going to replace us. I think people that use robots and AI are going to be able to replace a lot of jobs. Even we're not going to have some kind of Skynet level superintelligence by 2035. That's just not happening.
Right.
And that's because people that are in the space and people that are actually driving the space, I think, are getting a little ahead of themselves, in the sense that for a true AGI to kind of come online, for lack of a better term, it's not just about it being an LLM. We're going to need to have something that can interact with the environment. We're going to need to have something that can take in stimulus from the environment. We're going to need to have something that has good data to operate off of. And most LLMs, the reason why they hallucinate isn't just because the algorithms aren't good enough, it's because the data is junk. There's a lot of junk online. And the future of AGI is in environmental integration and also in data specificity. That's a long ways off. It's going to take us a long time before we can have a synthetic data source that is pristine for the collective knowledge of the human race, essentially, while that can also integrate new data at the same time as well and be able to sift out what is real versus what is not. So I don't think we're going to have a Terminator, Skynet kind of scenario coming on our place any time now. So I'm not trying to say that you have no reason to be concerned. I'm just saying that, you know, there may not be need to think that it's going to upend your way of life or my way of life in a very, very harmful way. I think we're going to have to adapt, and we're going to also have to adopt. So what I mean by that is we're going to have to adopt new technologies, and we're going to have to, bring in new ways of doing what we do, whether that be, social media or content or your whatever day job you have. You're going to have to adopt. You're going to have to adapt. I think people that can do that will find ways to survive. But to your point, will there be some disruption? Disruption, yes. That's inevitable. But does that disruption mean that society is going to collapse, or that we're going to have some kind of a feudal future where we have 100 trillionaires and the rest of us are just fighting for scraps? I don't think so.
I hope so. I am worried about the job displacement, though. I just look at like in the creative field, man. It's getting so good so fast, and when you build AI that makes even better AI and it just kind of self-propagates itself being better, I worry about how exponentially quick things are going to change, to your point. But I'm not worried about Skynet as much. I'm just worried about mass unemployment. But we'll see how it goes, All right, stay tuned. Adrian, we got another story I want to talk with you about here in just a sec, because Sora Ventures has launched Asia's first Bitcoin treasury fund at Taipei Blockchain Week. Because if there's one thing this industry loves more than Bitcoin, it's announcing that you're going to buy a lot of Bitcoin. They've got $200 million lined up and want to turn it into $1 billion worth of Bitcoin in 6 months. So basically, they're trying to do in half a year what most of us can't manage in a lifetime of dollar cost averaging. Now, this isn't just like Japan's Metaplanet or Hong Kong's Moon Inc., who just put Bitcoin directly on their balance sheets. This is a centralized pool of institutional cash designed to support existing firms and encourage new ones. Or in other words, it's like a Bitcoin Costco. Instead of everyone buying separately, let's all go in on a pallet together. Their press release even bragged about building synergies between regional and international treasuries. Or in other words, we'd like to turn your fragmented little clubs into one giant, well-funded cartel. Jason Fang, the managing partner, said Asia has always been a key market for blockchain, but until now it's been kind of disorganized. So this is the first time institutional money has come together from local to regional and now to a global stage, which is a polite way of saying we're tired of looking like the junior varsity team while America gets all the headlines. Meanwhile, Metaplanet already added another 1,000 Bitcoin to hit over 20,000, and Taiwan's WiseLink became the first local company to adopt a Bitcoin treasury strategy. So yeah, Asia is officially in the game, and if Sora spends that $1 billion on schedule, the only dip you'll be able to buy is salsa. All right, we're bringing back Adrian. Adrian, Sora Ventures is trying to build a $1 billion Bitcoin treasury in only 6 months. Is this a serious institutional play, or is it just another look at us press release type thing? What do you think?
It could be a little bit of both. I think that, if Q4 does well, will they get the kind of capital inflows and the potential to raise $1 billion? It's possible. But I think this represents more broadly is the Bitcoin adoption cycle has an entirely different structure to it right now. We have an entirely different investor base. We have the institutions, we have the corporations, and we have retail, right? And I think all three of those are interacting in the market right now. And, I'll put it to you this way. If I've been in Bitcoin since 2012, if in 2016, 2020, there had been and I'm talking about before strategy, right? So before then, if any of this news had come out, Bitcoin's price would have skyrocketed. The fact that it hasn't tells me that we kind of like what I was talking about earlier, Bitcoin is becoming a mature asset class, and is going through the maturation phase, and that's what this is. We're going to see different regions, different institutions, different funds, different corporations come in and make, some will make realistic goals, some will have grandiose goals. But I think all of it directionally is good for Bitcoin because it shows that the world different regions of the world are approaching Bitcoin in their own way. So Sora Ventures to me just represents another rung in that ladder towards broader adoption of Bitcoin. And whether they hit their billion goal or not, I think the fact that, I mean, they were even willing to come out and say it tells me that they must at least have some inkling that they're able to achieve it. But
Yeah.
that being said, even if they don't achieve it, let's say they only get to, half or three quarters, I think that's a net positive for Bitcoin, assuming that they become a longer term steward of Bitcoin and they're a longer term holder. So this is all good for me. As long as none of these companies are playing what can be called, sentiment games, I guess you can say, that they're just announcing these programs, they're making an initial purchase, and then you don't hear anything about them purchasing for 6 months, 9 months, a year. I think it's a net positive for Bitcoin.
Yeah, me too. And yeah, to your point, yeah, I think we are entering a very new phase of Bitcoin's maturation process, because back in the day, these types of headlines would have moved things really, quickly. And we've seen that on the other end of the spectrum too, with the Galaxy digital dump we saw a couple of, was it weeks or 2 months ago, where they sold 80,000 over the course of a weekend. But the market really reacted pretty nominally, and we're seeing that on both sides too. So, but it seems like the support, like we always joke, like it's up and to the right, but the supports are being built, so it's not going to see those undulations like we've seen in the past so quickly. It's just nice and slow up and to the right. We won't see the volatility because, yeah, this new institutional money in play seems to really be supporting, Bitcoin's price foundation, and the seeming stability that we've seen from it late, at least compared to past Bitcoin cycles, would seem to reinforce that idea. And going back to Sora, yeah, go ahead.
Yeah, that's actually part of my thesis, what you just said. I call it the stairway to heaven. I think we're getting new rungs that are being built, and we're stabilizing at each rung, and we're going to see that upward momentum. It'll be less violent and less dramatic, but it'll be more steady. The fact that I looked into the number the other day, we've been at over 100K essentially for quite a while now. At one point in my past, if you had told me that, I'd have been ecstatic. But now the entire market is just kind of like, meh, what's next? Yeah. So I think what we're seeing right now are those rungs being built out. We're getting the rungs built out on this stairway to heaven, and I think Bitcoin can hit $1 million in 10 years. That's where I think we're going.
Yeah. Bitcoin definitely has lost a little bit of the sex appeal, I think, that comes with the volatility, the idea that you could put a little bit of money in and 5, 10x, but with institutional money coming in, we're kind of getting everything we want, but then, in a certain sense, but Bitcoin is still kind of a victim of its own past successes, I think, in the eyes of like John Q. Public. It's just not as enticing of a play as it used to be, because everyone's trying to go from rags to riches. And now it's just another sound financial asset, probably the hardest, money on earth. And it just doesn't have the same appeal to some, but institutionals, they know, and that's why they're all putting their money in. Heading back to Sora here, Adrian, they're kind of interesting because they're pitching their play as Asia's first Bitcoin treasury fund. They're just pulling a bunch of cash together like a Costco pallet of sats. Do you see this model working better than the single company strategies that we've seen from Metaplanet or Moon Inc.?
So I can't speculate too much on that outside of the fact that a fund will have different dynamics than like a treasury company, right? So if you see it as a fund that's being built up to give individuals in the Asian market passive exposure towards Bitcoin, then they can structure that a variety of different ways that don't really align with like a Bitcoin treasury company, which is just looking for like pure volatility. So I would really have to research it a little bit more before I can say whether I think it'll work better or worse. What I will say is that I do think this is indicative of the fact that we're going to see different Bitcoin plays with different structures altogether. So we already had, the Bitcoin treasury play. We have the ETFs, which are the exposure to Bitcoin, right? I think that we could be seeing more funds with different kinds of structures coming in. I think we can also see different BTC companies with different ways of levering the Bitcoin or different ways of going to market and raising capital for Bitcoin as well. So the structure of these, I think, is going to see a lot of variation and a lot of change in the coming years. So Sora can just be, an initial foray into that. They can be saying to themselves, this is how we're going to structure it. We believe that there's strength and interest in the Asian market for this, and that is why we're moving forward with this model.
Yeah, it'll be interesting to see. And yeah, as this market continues to mature, we are, like to your point, going to see a lot of new interesting strategies come into play as people are trying to accumulate more Bitcoin on their balance sheet, because I think that gold rush has already started, and those in the know don't, or excuse me, those in the know, and those that don't know yet will soon enough. I mean, the writing is very much on the wall here, I think. Hang 10, Adrian, we'll be right back with you because I want to talk about this story from Tom Lee from Fundstrat, is once again predicting $200,000 Bitcoin by the end of the year. His reasoning, well, the Fed has been slow to cut rates, so Bitcoin's been kind of stuck. But once Jerome Powell finally blinks, Lee thinks Bitcoin launches. Meanwhile, Peter Schiff is polishing his gold bars and yelling, "I told you so," at anyone who will listen. Gold is up 10% in the past 2 months, hitting a record of over $3,600 an ounce. Schiff says that's the forward-looking market, gold pricing in cuts before Powell even opens his mouth. And he thinks Bitcoin missing that move is a giant red flag. Lee, though, ever the permabull, says don't worry, institutions are pouring in and changing the entire game. Schiff says, though, that Bitcoin's more likely to sink below 100K than hit 200. Prediction market, Polymarket, well, they would happen to agree. They put the odds at 8% for Bitcoin to hit 200K this year, and another 8% for it to crash under 70K. So basically, the market is as split as a bad custody battle. Schiff also points out Bitcoin is down 16% versus gold over the past 4 years, even though it's been up massively versus the dollar. Lee shrugs that off, saying institutional flows are the new driver. So what's the truth here? Well, Bitcoin's caught between Wall Street's resident optimist and the internet's angriest gold bug. One is promising the moon, the other is yelling bubble. The only certainty here, though, is whichever one is wrong will spend the next decade tweeting about it. Bringing Adrian back. Adrian, Tom Lee is back with his 200K call. Peter Schiff says Bitcoin's more likely to sink under 100K. When you hear these polar opposite predictions, do you lean bullish, bearish, or are they both just yelling for clicks right now?
I'll say this as respectfully as possible. I don't allow someone else's bullishness to guide my own. So while I think Tom Lee is a great voice currently, his prediction is not guiding what I think can happen. That said, I think he has a vested interest in Bitcoin doing well. I think he has a vested interest in Ethereum doing well. I do think he believes that they both will do well. So what we're seeing is him, voicing that opinion and leveraging social media as a way, and social media and media as a way to get that message out. So I think that's all fine. But again, I don't let his predictions guide me. I retweet them. I say, hey, this is fun. This is cool if it can happen. But that doesn't necessarily mean I'm saying, yeah, this is what's going to happen. I'm just making people aware that there's people in the space that think that we have further to run, and I'm aligned with them. Just perhaps not on price predictions. Now with Peter Schiff, he's been calling bubble. He's been calling Bitcoin crashing for God knows how long now. It's been over 10 years. So I tend to discount anything that he says. Again, trying to say this as respectfully as possible. Bubbles don't inflate, then deflate, then reinflate bigger, then deflate, then reinflate bigger. That's not a bubble. That's an economy. That's adoption.
Good point. He
will never admit that he is wrong because his entire identity has been built on being the gold bull and the Bitcoin bear. So I don't think right now he can change his stripes. He's built an entire reputation, an entire social media existence on that. So Bitcoin will be $1 trillion and he'll be saying he's going to drop down to $1 billion. So that there's no hope for him. He's stuck where he's at. So that's just how I feel about that. And with regards to Tom Lee's $200,000 prediction, as I said earlier, I think that's a bit aggressive. I think 150 to 175 is more realistic for this year. And that's not me being bearish. That's just me saying that we have to look at things objectively. As a function of market cap, it's going to take more money to move Bitcoin up, which means we will need more liquidity to move Bitcoin up. The rate cuts that are coming, those aren't enough, as I said before, to that, liquidity and, rate cuts and whatnot may create the capacity for the money to come into the market, but sentiment is what's going to create the bid. So that's what's actually going to drive the price up. The individuals, the corporations, the institutions, everyone, they're going to have to bid the price up. That's driven by sentiment. That's driven by market perception. As such, I don't know if we will have both in enough size and both in enough time to drive Bitcoin up to 200K by the time this year ends. Now, do I think that if we have a strong Q1 2026, that whatever run we see in Bitcoin in Q4 can extend? Yes, I think that is possible. But going from, what are we, 114 right now to 200 by December, I think that's, don't get me wrong, I would love to be wrong. I would absolutely 100% own being wrong, and I will sing from the mountaintops that I'm wrong if it does happen. I just don't think it's likely to happen by the end of this year.
Yeah, no, I agree. I think the stage is set, but to your point, sentiment is so important. We would need to see some kind of enormous catalyst on top, because like people are already expecting these rate cuts. I feel like we would need to hear like Google and Tesla come out and say we're both actively acquiring Bitcoin, and then you might see the wheels start turning in that direction. But 200K seems a little unlikely this year, but who knows, right? That's kind of the fun of Bitcoin. There's that unpredictability element to it. And then, you know, Schiff's just doing what he does, biggest gold bug out there. So of course he's going to be taking.
He has no choice at this point.
Everybody loves to kick loose. Yeah, he's so deep in that hole. He's got to die on that hill right now. But you know, predictions are fun. We do them. It's fun to talk about. And that's what brings us to our next point. So last time, since we had you on the show last, Adrian, we started a new game here. This is all for shits and giggles, so to speak. We are asking all of our favorite guests to give us their price prediction for Bitcoin by the end of 2025. And the winner of this, drum roll, is going to get a brand new Roxom Patagonia that I'm going to send your way. So Price is Right style. By the end of 2025, what is your exact price prediction, again, just for fun, of where you think Bitcoin will be? Because I'm really hoping I get to give you that Patagonia.
Oh, so I have to pick one exact number. Can't give a range.
Right, got to give one. We actually have a leaderboard. Can we bring that up, guys? Are we able to bring that up of who we've had so far on the show? So take a look. Yeah, let's go to camera 3 here. So you can see here are some of the predictions we've had. We've had as low as, 144, but as high as, was it 443K from Newt? So where do you think? We actually have more, but this is the list that we have available to show right now. So what do you think by the end of this year, Adrian?
I would say $149,000.
149. All right, we're putting you on the board. Beautiful. So we're going to keep track of that, and then we'll have you back later to see if hopefully I'll be handing you this fresh Roxom Patagonia. Everybody's clamoring for it, so I want to give it to you, though.
Oh, I'm sure they are.
All
Absolutely.
right, Adrian. So it's very nice. They're very nice. It's black. Patagonia's quality. So, Adrian, our time is running short here, but before we let you go, you always bring the heat with great objective takes of the space. I'm sure there are a lot of more people out there that would love to hear more of everything that you're talking about. What's the best place they can reach to or to go to learn more about you and everything you and the team at MSTR True North are talking about?
Well, my only real social media presence is on Twitter. So that's Adrian_R_Morris on Twitter, or X. I keep calling it Twitter. And as far as with the MSTR True North team, on my profile, we have a link to our website there. So there you can see a lot of our old live streams, as well as give us a follow on Twitter. That would be great at MSTR True North. We may be changing that to True North officially soon. And we do live streams every Wednesday. We've taken a little bit of a break here because there's been a lot of travel within the group, but we're coming back on the 24th. On our usually scheduled time. And yeah, that's the best way. My main social media presence is on Twitter, and that'll be the best way to follow me and find me.
Amazing. Well, Adrian, we always appreciate you, your time, your expertise and insights. Thank you so much again for joining us on the Blockchain Report, and we hope to have you back real soon, bud.
I'll be happy to do it. Thank you for having me on, and I'm very, very grateful for the opportunity.
Oh, pleasure is all ours. Thanks, Adrian. We'll see you soon, buddy. In the meantime, we're going to be taking a quick break here on the Blockchain Report, but we'll be back with more news, including our second guest of the day. We're talking about ERIC YAKES from Epoch, so make sure to stay tuned for that and more here on the Blockchain Report right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this
This is Bitcoin.
Bitcoin,
It's not just a cat, he's family.
quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
All right, welcome back. It's time for more Bull Run. Next up, we got GameStop, the company we all thought would be reduced to selling used HDMI cables out of a strip mall by now, somehow crushed their latest earnings report. Second quarter sales came in at $972 million. That's a 22% jump from the $798 million they coughed up last year, and about 18% higher than what analysts expected. Hardware and accessories like consoles made up nearly 61% of those sales. Collectibles, we're talking about like Funko Pops, trading cards, statues, and whatever exclusive merch they can glue a GameStop logo on, were 23% up this year. Software, though, limped in at about 16%. The big winner, though, was the Nintendo Switch 2, which launched in June and apparently saved GameStop from turning into a thrift store for broken Xbox controllers. Investors, they liked it. Shares jumped 7.5% at the open before settling around 6% higher by the afternoon. Over the past month, the stock is up more than 11%, and over the past year, up about 6%. Not meme stock glory days, but better than, is GameStop still a company? Now here's where it gets Bitcoiny. See, earlier this year when GameStop announced it would put cash into BTC, Wall Street kind of rolled its eyes. Fast forward, though, and the company confirmed it has shoved about 6% of its cash pile into Bitcoin. Now, by the end of Q2, that stash was worth over $528 million. So the company that once gave you $3 in store credit for a $60 game is now holding over $500 million in Bitcoin. Talk about leveling up. Analyst Julian Lin says GameStop is successfully leaning in to trading cards and collectibles, and he's bullish on the pivot, which is analyst speak for, okay, fine, I guess they're not dead yet. Of course, the long-term picture is still pretty messy. The industry moved digital years ago with Nintendo, Sony, Microsoft, Amazon, Walmart, Target, and Best Buy all eating their lunch. GameStop was the blockbuster of gaming until Ryan Cohen showed up in 2023, grabbed the CEO seat, and started rewriting the playbook. Today, GameStop is the 33rd largest public company in North Texas by revenue, employs around 8,000 people, and apparently has a future as a collectible shop with a Bitcoin treasury. Wall Street might be confused, but Bitcoiners, we call that a glow up. In other news, Pop Culture Group, ticker CPOP, is the latest entertainment company to suddenly decide that it is also a Bitcoin maxi. On Wednesday, the China-based firm bought 300 Bitcoin worth about $33 million. They say it's the first step in building a diversified cryptocurrency fund pool, which, let's be real, means Bitcoin, Ethereum, and some altcoin you've never heard of called BOT. The company claims it has 4 guiding principles when picking coins: high investment value, strong growth potential, alignment with company strategy, and whether it comes with high-quality artists, because nothing screams financial rigor like token managed by an artist. The CEO, Huang Zuoqin, says this is all about creating a Web3 pan-entertainment super ecosystem. According to him, entertainment will transform from disposable emotional experiences into appreciating digital assets. So next time you watch a movie, don't clap, hodl. Pop Culture Group describes itself as focused on the industrialization of Chinese pop culture, which apparently now means keeping Bitcoin on the balance sheet. And they're not alone. Entertainment firms have been busy jumping into the crypto pool. The Justin Sun-backed TRX treasury, now called Tron Inc., was born out of a merger with SRM Entertainment, a toy and plushie manufacturer. Yes, so plushies plus crypto, a sentence I didn't think I'd ever say, ever. The stock market reaction to all this? Well, CPOP opened trading at $2.11, up more than 40% from Tuesday's close of $1.36. Then it dropped back down toward $1.36 again anyway. Still, the stock is up more than 55% over the past month. Meanwhile, our friends over at the H100 Group are quietly stacking harder than your favorite Jenga player. The health technology company added another 21 Bitcoin at an average cost of around 1 million Swedish krones per coin. That purchase, worth about 22.5 million of those krones, pushed their total stash to over 1,000 Bitcoin. That's enough to help bump H100 up 3 spots in the Bitcoin 100 ranking, putting them around 41st place. CEO Sandra Anderson, who we've had on the show a couple times, went on X and proudly declared we will always strive to buy weekly. H100 is listed on the NGM Nordic SME exchange, and they're building AI-driven tools for health and longevity. Their plan is to create an integrated ecosystem of services, expanding further through acquisitions. And their Bitcoin strategy has heavyweight backup. We're talking, of course, about Adam Back, Blockstream's CEO and early Bitcoin pioneer. He's cheering them on from the sides. He's calling it digital gold, which is exactly what you want to hear when you're dropping millions of dollars on sats. And oh boy, Eric Trump is back in the news. The presumed second favorite son of President Donald Trump is learning the hard way that not every board seat is forever. According to an SEC filing on August 25th, crypto-turned-fintech Alt5 Sigma quietly downgraded Eric and World Liberty Financial co-founder Zach Folkman from board members to board observers. That's basically the corporate equivalent of, sure, you can sit at the table, but no talking or voting, and bring your own snacks. The excuse? Well, the NASDAQ's listing rules, because apparently even NASDAQ has limits on how much Trump DNA you can cram into a boardroom. And it contradicts Alt5 Sigma's own announcement. from August 11th, where they bragged that ERIC was a shiny new director as part of a $1.5 billion fundraising deal with World Liberty Financial. Their own website still lists him as a director. The SEC filing says no, the company website says yes. So Eric Trump is officially Schrodinger's board member, both on the board and not on the board at the very same time, or until somebody finally opens the box and checks. Alt 5 Sigma itself has had quite the glow up as of late. This company started as a biotech called Jan1. Then in mid-2024, they pivoted to crypto infrastructure because curing disease was apparently less profitable than selling tokens to the Trump family. As part of the deal, Alt 5 Sigma received $750 million worth of World Liberty Financial tokens, 1 million shares, and warrants to buy another 99 million shares. Basically, monopoly money with an option to buy more monopoly money. Zach Witkoff, son of Trump's Middle East envoy Steve Witkoff, is also a chairman of Alt 5 Sigma's board, because when it comes to Trump-adjacent adventures, there's always another family friend's kid waiting in the wings. Meanwhile, the Trumps are stacking billions off of crypto themselves. Since Donald took office again, their wealth has ballooned through World Liberty Financial, the official Trump meme coin, their American Bitcoin mining outfit, and Trump Media, parent of Truth Social. In the past week alone, American Bitcoin started trading on the NASDAQ, and World Liberty unleashed 24.6 billion World Liberty Financial tokens, instantly giving the family stake a $5 billion paper valuation. But the party didn't last long. Users reported their tokens were suddenly locked for being high risk, which is crypto's polite way of saying we froze your funds because we felt like it. One holder suggested a governance vote because nothing screams stability like turning a multi-billion-dollar mess into a popularity contest. So yeah, the Trump family's balance sheet is ballooning, but bag holders are learning the oldest lesson in crypto: the house always wins. And this house has gold trim and a Mar-a-Lago address. We're taking a break, but when we're back, we're going to be joined by our second special guest of the day to talk shop. So stay tuned. All that coming up on the Blockchain Report right after this.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
markets runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
All right, welcome back. Well, I got a treat for you boys and girls out there today, as it is time for our second guest of the day who's going to join us for our deep dive. Now, our guest today walked away from private equity to go all in on Bitcoin, and he hasn't looked back. He's now running Epoch, a venture fund backing freedom tech and the builders shaping the next monetary revolution. He's sharp, insightful, and here to cut through the noise. Let's give a big blockchain report welcome to ERIC YAKES, everybody. ERIC, welcome to the show. Our audience is thrilled to have you, and so are we. How are you?
Good, man. I'm excited to get into it today.
Yeah, I am too. And before we do, ERIC, I want to, for our audience out there that isn't familiar with you yet, just give us the short and skinny. Who are you? What's Epoch about? Tell us more. We're eager to learn.
Yeah. I just came from the TradFi world, and I got sold on Bitcoin when I realized this is an unstoppable thing. Jumped into the industry, wrote one of the early economics books on Bitcoin, The Seventh Property. And that's kind of what got me started. I think there's a bit of virality around that. And then through that, I realized the biggest problem in Bitcoin is companies and infrastructure that needs to get built around it. And that led me to building Epoch, where we're investing in all of that. And, it takes my background as an investor and allows me to apply that to what's happening in Bitcoin today. And other than that, I meme and I shitpost a bunch. And that's kind of my favorite part about all this, is just the memes.
I noticed that you should post a bunch because I checked out your X profile, and something I thought was super interesting was your banner is a picture of Mike Tyson. I love Iron Mike, so I gotta ask, what was the reasoning behind that? Is that how you approach Bitcoin investing, like Iron Mike approached boxing? Everyone has a plan until they get punched in the face. Like, what's that about?
Yeah, and I never really thought about it too much, to be honest. It was funny because a lot of way, so like one of the primary things that people like remember about my book, and it's funny because it wasn't a very major decision, but I had memes in my book, and I used Mike Tyson and Kanye West for a lot of those memes. And it was
Nice.
funny because the way that that happened is pretty much once the book was done. I go through at the end and I'm like, okay, every chapter needs a quote. Like that's just something people do with books, and
Yeah.
most people for a book like mine would put like the quotes of economists or something like that in there. And I was just,
Mhm.
I'm just like, that's boring. I don't really want to do that. Everybody does that. And I was like, okay, well, what do I want to do? And I was like, some of my favorite people that are like the most quotable people ever, it's pretty much Mike Tyson and Kanye West. And like some of my
Yeah.
favorite, if you just like go look at some of the old YouTube videos of shit that Mike Tyson would say back in the
Oh
90s,
yeah.
it's some of the most hilarious things you've ever heard. And like what I love about those guys
Yeah.
is they're very authentic. And I guess yeah, from that perspective, like that's the person I always kind of wanted to be, was just super authentic with my viewpoints about everything and not being like very salesy, but literally just saying exactly what's on my mind. And and yeah, man, so that's why I like Mike, and that picture of him in my cover photo is just him in one of his fights wearing a tank top that just says "Be real" on it. And yeah, he's got to be real, man. You got to be like Mike.
You do. I love that you just took people that like famous quotes from people you like. That's way more fun. Like Ye's got plenty of those. Like, do you have a chapter that's just his quote, just "I'm a genius" or something? Like Ye is
Yeah,
just so
yeah, I'm a genius,
unapologetic,
man. Yeah,
uh,
yeah, yeah. He's got a million.
despite how crazy he
Yeah,
is.
he's insane, but that's what makes him cool.
Yeah, I remember watching the Yeezy documentary that was on Netflix years ago and thinking like he's insane, but like he's also this delicate genius and I kind of understand. He's a guy who comes from a lot of pain with like his mom passing away and stuff, so it humanizes him a little
Yeah, it
bit.
was
Yeah,
so
but
funny
he
that
is
he
really
was
noteworthy.
like, he started doing the documentary of himself before he was famous. Like that's awesome. Like nobody does that. And
Right.
yeah, and I mean like I don't know, he's probably got some pretty extreme narcissism. I don't even know what narcissism really means, to be honest. Like I'm probably narcissistic to some
Yeah.
degree, but like
Everybody's a
regardless,
narcissist
it's
by the
he's
definition.
always said exactly what's on his mind. And I feel like if more people
Mhm.
did that, more people would come off with probably a similar degree of being like conceited or whatever. But yeah, so funny. There's just like him making a documentary about himself as if he was going to be famous before he was famous at all.
Yeah, he's a master class in conviction and maybe manifestation too, if you're already
For
prepping for
real.
your documentary about yourself years in advance. That was a wild one though, I enjoyed it. So I want to get back on topic here. You said you came from TradFi before you got into the Bitcoin space. It's a tale I hear very often when I talk to people on this show, and I love to kind of understand more about what was your, that phrase, your orange pill moment. I want to make a graphic where I go like, orange pill moment or something like that. What was that for you? What was the moment that you realized that this was much bigger than maybe you initially thought it was going to be?
Yeah, yeah. I think the biggest thing was when I first had been introduced to Bitcoin, people referred to it as blockchain technology, and that just wasn't something that ever
Mhm.
really got me interested. From the perspective of somebody who comes from the investment world, um, when you hear that, you're like, okay, so it's this new technology, and how do I value it? And everybody in finance is trained to value things from a framework of some form of securities analysis because that's pretty much everything we've invested in. So everybody, and that means that you look at the value of something based on cash flow that it produces in the future in some way, shape, or form. There's a lot of jargon and different types of ways of doing that. And and so from that perspective, when I heard blockchain technology, I'm like, oh, here's this technology that doesn't produce cash flow. So it wasn't really that I like hated it. I was just like, I don't know how to value it, and that's kind of not
Mhm.
the type of investing that I do. From an economic standpoint, I understood central banking and the issues caused by central banking. And that was just something I was pretty nihilistic about. I was just like, this is the way it goes. Some people invest in gold. I invested in gold, and that's good, but it's really not solving the problem. It's just kind of like relieving some of the symptoms in the short term. And so there was no like cure that really existed. And then the first time I heard, oh no, Bitcoin is an alternative to central banking, that's what got me really interested. That's what sent me down the rabbit hole, and I started spending a lot more time because it's not really that the way of valuing something was changing. It was that the water in which we're doing all this value, the water that we're swimming in, is changing, and that it's a new paradigm. So that got me very interested, and I spent some time like learning more about crypto. And it took me like a year to really come back around to the idea of like, okay, Bitcoin is really the only thing that's fundamentally changing that thesis. And that's the whole, that's the meat and potatoes. That's the whole thing that we're doing here. So Bitcoin was really the only thing that I cared about from that point on. I never was like, all of crypto is a shitcoin and I think everything's going to zero. I definitely think that like best case scenario, some of these are valued as like software companies. And while that's interesting, it pales in comparison to what's happening with Bitcoin. So I'm going to focus everything on what I'm doing in Bitcoin. And then the kind of question around why I built Epoch is related to some more complexity kind of around that. But yeah.
That makes sense. Yeah, I mean, that seems to be, again, kind of a tale I've heard many times. People didn't necessarily know how to evaluate and value Bitcoin against the backdrop of traditional financial frameworks. And that's something that we're still seeing kind of evolve with, Bitcoin per share and all these different new metrics that are coming out. So that makes a lot of sense. And then I want to talk about Epoch here that eventually led to that. Tell us about it. What is it? Why did you create it in the middle of a bear market that scared off half of crypto Twitter? We've got questions, you've got answers. What are they?
Yeah. So for those not familiar with venture capital, it's just within the world of investing, you invest in securities, right? You can invest in securities or you can invest in commodities. And securities are kind of divided primarily between public securities and private securities. So public securities is things like stocks and bonds. And then private is things like, you've heard the term private equity or debt or loans, aka private debt. There's a lot of different kind of overlapping terms within finance. But within the world of private equity, just things that are securities in ownership of a company, but private, whereas public is something where it's standardized. It's like you have to pass these thresholds that this regulatory agency has created or these exchanges have required you to have in order to list on a public exchange. And it creates standardization across the securities, so it's easy to trade amongst them because all the terms of what you're investing in are similar. So once you meet certain standards, you can trade publicly. And that's what a lot of the growth within a company is kind of geared towards, is hopefully getting to a point where you are a big enough company and you can meet those standards. And then you can meet the standardization, and ownership of your company is much more liquid because of that. So there's all these benefits to wanting to be public, but the vast majority of value actually exists in private markets. And because it's not standardized, it's a lot more complex and it's a lot less liquid, and there's a lot more inefficiency that kind of exists. So within the world of the private markets, venture capital is this segment of private equity. And it's the earliest stage, kind of highest risk version of private equity, where you can invest in like a mature business in the private equity world. Venture capital is when it's in the startup form, or when it's just like growing out of the startup form. And that means there's a very high risk of bankruptcy. So, I mean, the reason that we're doing that is because that's the stage of a lot of companies within the Bitcoin world today. And our view is that Bitcoin is, one of the best performing assets in measurable history on an absolute and risk-adjusted basis. And we expect that growth to continue. And you can kind of think about how Bitcoin treasury companies, people are investing in them because they're like a higher beta or like a higher return version of Bitcoin to some degree. We view that that's possible with some Bitcoin startups. We think that their revenues and thus their profits are tied to the growth of Bitcoin. And they're also able to capture some of the inefficiencies that you get from investing in private markets. And the way you can see that happening is if you have a company that's valued at, like $5 million today, and it becomes like the next big thing in Bitcoin, that it's very feasible it's worth billions of dollars tomorrow. And if we can invest in enough companies like that over the next 5 to 7 years, then we're going to have some pretty strong returns that are going to grow alongside Bitcoin as well.
Interesting. I love that approach. And I also love that you guys have a tagline that I would love to talk about. And it's an epoch is a remarkable period in time. Why is this the epoch for Bitcoin venture capital right now?
Yeah, there's a lot of, there's a complex way of answering that question. But at the highest level, right now is kind of this point in time when we're, we can see all these catalysts that are forming, right? With ever since BlackRock has adopted this, the largest financial institution in the world, the largest government in the world is vocally supporting it under the Trump administration. It's legal tender in multiple countries at this point. We have all these catalysts that are kind of conforming around it. And it, I think we'll look back on this point as the major first inflection period in the growth of Bitcoin, when we're kind of at the bottom of this S curve of it being adopted as a store of value around the world. I'd say that that's kind of the epoch that we're in right now. And the reason I chose that term is, one, because an epoch just means a period of time in computer science, and it's really important in Bitcoin. It's based around the 4-year period in which the supply of Bitcoin gets cut in half, and that's kind of considered the primary epoch within Bitcoin. But it also has an alternative definition just to mean a remarkable period of time, and that's exactly what we're living through today with Bitcoin.
Nice. Yeah, no, that makes sense. And I would agree with you. This does seem like the setup is for an inflection point right now compared to what we've seen in the past 15, 16 years. A lot of tailwinds, both on the regulatory side, the institutional side. So things I think are shaping up pretty nicely. And your company is targeting early stage companies with valuations that are under that $10 million mark. So what kind of founder or pitch makes you and your team actually lean forward in your chair instead of quietly zoning out during a Zoom call? What are you guys looking for as you're finding these new companies to invest in?
Yeah, that's a really good question. Definitely something that's novel, which is hard to do, right? We'll talk to a lot of startups that are trying to do a similar thing. And if they're not if their idea isn't as novel, they have a very novel strategy for how they plan to execute on it. That'll typically make me lean forward in my chair. And then people with unique backgrounds or founders with a unique skill set. The founding team is primarily what we're investing in, right? When you're investing in an early stage, the market's often not proven yet, and we don't know if the market exists. Today you can be okay, somebody says, I want to go start a Bitcoin mining company. That's a pretty proven market. So it's easy to be okay, we know that this market exists. We know that there's demand for it, but the trade-off is it's much more competitive. How are you going to compete against all the guys already doing it? Whereas markets that don't really exist yet, until they do, you're taking a huge risk that, that market has to pan out. So a lot of times founders are going to learn that the market that they initially were going after doesn't really exist, or at least the way they were going about doing it is not the best way of approaching it. And things will change. So when things change, you need a really good team that you're investing in to say, actually, we're going to pivot this direction because we learned these new things. And really it comes down to the judgment of a founding team and what their capabilities are, and whether or not they, have the abilities to make those types of pivots when the time comes. So yeah, meeting good teams, and people that really come across as authentic in that process too. I think one of the hard things is you're starting a company and you have to sell it, and there's a way of being persuasive in a selling process that I think is compelling to an investor. And it's probably different for us than it is for other investors, but if we don't really trust the words that are coming from the founder's mouth, then it's hard for us to really trust anything else about what's happening. So people that are really authentic too is something that resonates well with us.
Yeah, that makes a lot of sense. I mean, when you're talking to these people, you're really investing in the people at the jump, right? Looking for those next great founders, the next Zucks or something out there that you get as this young kid and who transforms into this absolute juggernaut who's forward thinking. Say what you like about him. The guy's done, say what you want about Zuck. He's done well for himself. So that makes a lot of sense. And your fund too also says that it invests in freedom enabling technologies. Can you define that for me? What does freedom actually look like in a cap table?
Yeah, that's also a good question. I think it's challenging to answer this from the direct standpoint because often what we see today with some of the more freedom leaning enabling technologies, like in a very direct form, is that that's often coming through like free and open source software. And at least today, there aren't as many investable opportunities around that in Bitcoin as maybe, would be desired. And it doesn't mean that you can't monetize free and open source software. Like there are profitable business models that have emerged around open source software. And it's based on the development of these types of software. And that's things like Red Hat are kind of like, the crown jewel of that idea. But the way that we view that is investing in adoption of Bitcoin. And if Bitcoin becomes more adopted, then that's enabling freedom and the technologies kind of related to it. So any sort of technology that's growing the adoption of Bitcoin, we view as valuable. And that can often mean it's bringing about freedom enabling technologies in more of a indirect way. And yeah, so when you think about Bitcoin from the perspective of adoption, it's a very broad way of viewing it. And we could view that as, even a company like a custodian or something that isn't making it much easier for people in a particular country to get exposure to Bitcoin so that one day they can move towards self-custody. But first, it's just like, number go up or the ease of access that it provides through technology before they learn all those things that leads to that happening later on.
Got it. Interesting. And when I was doing my due diligences on you, I read something that you wrote that said, you said that Bitcoin is the most important innovation of the millennia. Okay, but in practice, what are the top 2 or 3 sectors you think will spit out the first Bitcoin native unicorns? Where should we be looking?
Yeah, I think we put out a recent report on the US banking system because so many regulatory changes have happened this year. And I think when it comes to unicorns, where a lot of quote unquote users exist today is kind of native to the system because it's, what everybody's been using within the US for a lot of, just owning their capital. Everybody has to be a part of the banking system if they want to participate in some way, shape, or form. And in a lot of developed economies, that's kind of how it works. So what we could view as a very strong business model emerging, I would say, is around lending within the banking system today. So while that has a lot of things that I think people in Bitcoin are against from a banking standpoint, like the ultimate goal is to undermine a lot of the practices that banks are doing in the current financial system. I think that a direct way that we do that is by having Bitcoin kind of infect the banking system today as it works. And then that allows users who are already participating in that to very easily start getting exposure to this. So a company that's basically like, everybody has to have their Bitcoin software for the Bitcoin stuff they want to do, and then they have their fiat software for the fiat stuff that they want to do. I think we're really close to having a company that allows them to do both seamlessly, very easily. And without all the extra fees and runaround, and they can do that natively with the banking license. So a company like that, I think, is definitely in like the unicorn status type camp.
Yeah, that makes a lot of sense. Do you think could just a traditional bank then just start integrating Bitcoin stuff in it and then just capitalize on that, or do you think it'll be a wholly new formed company that's able to kind of effectively combine these two worlds of traditional finance and the Bitcoin ecosystem?
That's what we wrote this report about.
Oh, there you go.
Using third-party service providers that enable that. Like a bank doesn't have a lot of proprietary technology. They usually use third-party service providers for most of their technology. integrating Bitcoin in the most seamless way into their protocol stack is not the easiest task. We lay that out in detail in this report, and we wrote this with the former chief technology officer of Silvergate, and they built this SEN network, which was kind of like the primary bank tech that was used by exchanges before Choke Point 2.0 effectively, took him out back and shot him from like a regulatory standpoint. Now that that's all been resolved and we have an administration that's working alongside, like crypto companies, it's a lot easier for these types of companies to exist. So I think that from that perspective, it's rebuilding the systems up in kind of a more native way and integrating Bitcoin into the protocol stack is it's a little bit more of a challenge than you would think. And there's probably going to be a few service providers that are working directly with banks. And then it comes down to what's like the first use case around that. Well, there's a lot of banking services, right? Like it's not just lending, you have custody and you have brokerage, and you have FX settlement. And there's a lot of complexity that goes into, okay, if we're doing this specifically for Bitcoin, what's the best way to do all of these functions? And there's actually a lot of opportunity for specialization when you start to focus on it specifically around that. So building the relationships to have all the direct like Bitcoin collateralized loans, we can see a lot of companies that are starting to move that direction, and that type of lending is a specialization. So I think the specialization around it doesn't just come from a technical aspect; it comes from like a business aspect as well. And I think companies that are really focused on that are going to have a competitive advantage over those that are just, plugging it in as an option or a feature and not providing the most competitive version of it.
That makes sense. So it's like you're kind of saying it would be easier and more effective to just natively build something from the ground up that's going to combine these two things rather than trying to add it into an already like built system. Am I kind of understanding that correctly? Like if Chase was like, hey, we're going to provide all of these things and integrate it into our system, it might be a little clunky and they might not have the tech as opposed to somebody else building it out natively?
Yeah, so it's basically like if you are Chase and you want to have this built into your system, you're probably using a third-party service provider that bottlenecks you in being able to do that.
Right.
So you have to get them to want to do it, or you have to build it yourself. And that gets really complicated for like most banks. And then when you think about the types of banks that want to be doing this, they're typically not banks that are of the size of like a Chase. Like Chase has the ability to build their own things in-house and like make these types of moves because of the scale. Or when we say Chase, that's kind of the more commercial side, but JP Morgan. But like when you think about a type of a bank that would be doing this, it's like a regional bank. And those types of banks, they get a competitive advantage by being more specialized in something. So they're the ones who might take more risk. And they're not the ones typically doing things in-house. They're using third-party service providers more often.
Got it. That makes sense. I appreciate you clarifying that. And as somebody looking to invest in companies, or as in VC, we know, it's a notorious space for FOMO investing. You see it all the time, which begs the question, how do you resist chasing, shiny altcoin projects when they pump, and instead you're sticking to the Bitcoin is not equal to crypto mantra? How do you stay focused on that when there's all these shiny toys popping up all the time to make sure you're investing in sound long-term projects as opposed to the next fad?
Yeah. It's really hard from like, we don't view it even as much as like Bitcoin versus crypto from that angle. Like a lot of that's resolving in the market right now. If you kind of look at now that crypto's not going up nearly as much as Bitcoin's going up, it's like washing out a ton of that market. And some of it's probably going to remain for a long period of time. But the whole like original thesis that made that so compelling, and that was pretty much when you were able to issue this token that would go up a ton in value out the gate because everybody was speculating on it years ago. It made it really hard to be a venture capitalist in the space and not do that because you would get returns so quickly for your investors. And like basically before tokens, venture capital was this industry where, and still is today, but this industry where it's really illiquid to the point I was making earlier. So you need to have high returns to capture that benefit for your investor, or that cost for your investors. Say, okay, we're doing this really illiquid investment, but the returns are going to be so high that it's going to be worth it. And the model kind of changed for these funds that were investing in tokens, because like, not only do we get to do these early stage companies that are in the private markets like this, but now we have kind of like a public market way of monetizing this, and we can do it in like 6 months. And then that created this perverse incentive within the industry. They're like, well, we don't, the whole goal is to get returns, and we can kind of get that from like pumping the value of the token and not actually creating a valuable company. And then the pump and dump token scheme started to be really pervasive. And there were like funds that were posting really high returns for a period of time. And then a ton of them got burnt and all closed up shop because that, the music stopped. And, so now that that's kind of happened, and like there's this show called The Gord Show, and he had this tweet where he was just like, I think retail investors learned too much last cycle. And like that's the best way of like framing what happened in crypto, is like everybody's got smart and realized like this isn't a sustainable thing.
Yeah.
So it's good that like we don't have to compete against that, because it would be a lot harder for us to raise funds and a lot harder for us to justify investing when that's happening alongside us. But I think that what's kind of shifting now is that it's a lot easier for us to focus on Bitcoin without that. And the realities in the market are starting to shape up, where people are realizing, okay, so Bitcoin is kind of the major innovation here. And then on the software side, like a lot of the more like, reasonable ideas that emerged in crypto, those are being replicated on Bitcoin, and not using a token, but using Bitcoin as the token. And that's what a lot of people are realizing, is like, okay, this whole value of the token is basically just like a more liquid form of trading something, or it's through money. And if we're using money, then we should basically just use Bitcoin and not try to create our own money. So the idea that you can create your own money for whatever type of software company you have is kind of dead. And that means people are just going to be using Bitcoin as a form of money, or something like a stable coin, which is more what like, corporate institutions are doing right now.
Right. Yeah. No, and I think we're all glad a lot of those other monies are dying off. I think the market has kind of shown us that people are not as interested in those. We've seen plenty of coins crash. That whole NFT thing of a couple of years ago. Oh my God, what were we thinking? But we've kind of all come to realize Bitcoin is the way, the truth, and the light. And that brings us to our next part of the show here. Eric, so we have a fun game. We play on this with all of our guests, okay? This is only for fun, shits and giggles, not financial advice. We are in a very unique cycle of Bitcoin. So at least this year has been very unique. A lot of tailwinds, like we talked about, from the government. Institutional adoption has been rampant, which begs us for the big question everybody is always asking: where is Bitcoin going to be at the end of this fruitful year of 2025? So, Victor, if we can bring it up here, we actually have a leaderboard of some of the guests we've had on the show and their price predictions for the end of this year, because we are hosting a Price is Right style game right now, and the winner of this game, who can predict Bitcoin's price the most accurately by the end of this year, I'm going to send a Roxom Patagonia jacket to. So right now you can see some of the people we had. We had Joe Burnett thinks 150. We've got Newt Svanholm. I love his 443,000. I love the optimistic view there. Tim Kotzman said in the 300,000s. So in your opinion, again, just for fun, because I want to put this jacket on you, what do you think Bitcoin's price will be at by the end of this year, and why?
What kind of jacket is this?
It's a Patagonia, Roxom Patagonia.
Oh wow, okay. So all the TradFi bros are drooling over this.
They will.
All right.
If you want to auction.
End of this year. Yeah. End of this year, 207,000.
207,000. All right, put Eric on the board. Beautiful, Eric. Well, I got to tell you, my friend, it has been an absolute pleasure having you join us on the Blockchain Report today. I'm sure there's a lot of people in the audience who may not have been familiar with you before, are certainly familiar with you now, and would love to learn more about your hot takes and your meme action on the Twitters. Tell me, where can I send our audience to learn more about you and everything you and the team at Epoch are up to?
Follow me on Twitter. It's just my name.
Perfect. Follow them on Twitter. That's the name. And then Epoch, if people are interested in what you guys are up to, you got what's the best website they can go to check
our
out?
Website is epochvc.io.
Mm-hmm. epochvc.io. All right, you guys heard it first. Well, Eric, I got to say thank you again so much for your time, your insights, and expertise today. It's been an absolute blast having you on the Blockchain Report. And next time we have you on, I hope to be sending you a Patagonia jacket, bud.
All right. Thanks, Hank. Later, man.
Thank you. It's been a pleasure. Cheers. All right, gang, we're going to take a quick break, but when we're back, we're going to wrap up today's episode of the Blockchain Report, so stay tuned. You won't want to miss it. We'll be coming back right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go.
Welcome back. It's time to wrap up today's show with a little bullish, bearish, or BS, where we break down the top stories of the day and see how they are looking for Bitcoin. Let's get it started. First up, Charlie Kirk, a right-wing personality and vocal Bitcoin supporter, was shot and killed during a Utah event yesterday. Within hours, traders launched multiple Kirk-themed meme coins, some hitting tens of millions in market cap before collapsing. I'm going to call BS on this for Bitcoin, but bearish on this for humanity, okay? Because this doesn't move Bitcoin's fundamentals at all. It's a tragedy being shamelessly commodified, and while it shows the worst side of crypto culture, it has no real impact on the long-term Bitcoin adoption or price. But I'm bearish on this for humanity, gang, all right? Like, this is America. We're better than this. This is a country that was founded on the idea of free speech and being able to have these types of talks with one another who are across the aisle, even if we disagree with them. Guys, there's no place for this kind of thing in our country or anywhere right now. Whatever happened to sticks and stones will break my bones, but names and your opinions will never hurt me. Let's maybe adopt that again. And remember, these are words, gang, and if you, it's craziness. I condemn it on every sense in every way possible. And rest in peace to Charlie, and thoughts and prayers to his family. Tragic event. Don't like to see it. We're better than this. Let's be better than this, okay? Next story, we got SEC Chair Paul Atkins announced a pivot toward clear and predictable rules for digital assets, hinting most tokens aren't securities, and even pitching a crypto super app. Meanwhile, cooling inflation strengthens the case for Fed rate cuts. I'm calling bullish on this. I mean, regulatory clarity plus dovish macro conditions is rocket fuel for Bitcoin. If the SEC actually delivers on friendlier rules, institutions will pile in, making it easier for Bitcoin to break past that 124K mark and aim even higher, baby. I mean, I'm bullish, right? Again, SEC flips friendly plus rate cuts equals institutional money coming on in. You gotta like to see it, so we're bullish on that. So we got one BS for Bitcoin, one bullish, one to go. Lastly, Oracle's co-founder saw his fortune surge past Elon Musk thanks to an AI-fueled stock pump before slipping back below Elon by the end of the day. This whole thing highlights how AI hype is minting wealth at record speed. But what does it mean for Bitcoin? Not a lot right now, so I'm calling BS. I mean, Larry Ellison flexing on Musk for half a day doesn't change much for the orange coin. It's some fun billionaire drama for sure. I'm here for it. But unless Larry decides to move a few $1 billion from his couch cushions into BTC, I'm going to just call this noise for now. So I'm calling BS on that. So today's tally, 1 bullish, 0 bearish, 2 BS, which means today's diagnosis is BS. Not a lot moving the needle today. Hey, Mr. Hanky, good to see you there, bud. So yeah, BS on the day. But that is a wrap for today's show here at the Blockchain Report, boys and girls. As always, thank you so much for tuning in today. Remember, we're here Mondays, 10 a.m. to 12 p.m., but every other day of the week, that's Tuesday through Friday, 8 a.m. to 10 a.m. Pacific time. You can check in on us to get all of your crypto chaos and blockchain fixes. As always, thanks for tuning in. Make sure to like, follow, and subscribe to RoxomTV and me at Hank at RoxomTV on Instagram, YouTube, Rumble, X/Twitter, TikTok. I think I'm even on Blue Sky. Do people use that? Apparently they do, but I'm there. And I will see you all tomorrow for more of the same. Until then, stay strong, stay vigilant, and as always, hodl on.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
He's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry